Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen has been a very exciting and interesting stock to trade, with a high volatility providing opportunities and also ongoing projects fueling the speculations. At the same time, the company is having a hard time proving to the market that it is a serious player that investors can trust their capital for the long term. In this video, we will go through the latest fundamentals, the price actions, and my analysis as well recommendation to hopefully help you make the best decision possible. Before we begin, I'd like to state a brief disclaimer. My videos cover my opinions on current events and what's likely going to happen. They're not investment advice and should be watched for entertainment purposes. So my videos are prepared either immediately before the uploading or sometimes up to a few days before. Some of them may no longer have the price chart corresponding to what you see on the latest price chart. Nonetheless, they would still be relevant to analyze the subsequent price tendencies and improve on the decision making in, I would say, the short term. Also, the videos aim to cover the securities as broadly as possible, including the fundamentals and technical aspects, other than the price action and the latest news. We're also going to cover the long-term tendencies, shareholder composition, fundamentals, and other market behaviors, because they will all affect the decisions about if we should buy a security and how many shares we want to buy. So with all that being said, let's begin with today's topic. Mullen operates in the EV manufacturing, distribution, and marketing sectors. It acts as a holding company for multiple brands that they have bought over time, the latest ones being Bollinger and ELMS. The company first began operating around 2014 as a successor of Koda Automotive. Another one was called Mullen Motorcars, developing Mullen GT, one of the world's earliest EV supercars, back in 2007. It's convincing to say that Mullen has been a veteran in the field, and that at least we can say that they have been around for the long game. So the question is, which game we're talking about? Is it the game to develop the operations, or is it just a game to hustle out investments money? So the sector has been known to be competitive and also capital intensive. Mullen at the moment seems to be a little bit paper thin compared to the behemoth in the sector, because they're either fully blossomed or they're backed by sovereign funds. In the case of Mullen, I mean, if you look at like the videos online and you ask yourself, what does Mullen have that other companies don't? I mean, maybe you can say that you have the quote-unquote charisma of the CEO. Does it count? It does for many. But I think that we should at least ask the question, you know what I mean? So another source of distrust is indeed the CEO himself. He has a track record suggesting that he is in the whole thing to squeeze out investors' money, as well as giving control of the company to some of his associates. Of course, these are speculative things that people say for the time being. But I believe that in this area, when there's so much smoke, there can be no fire. Okay? So we should exercise some vigilance. For more details, you can look up what Hindenburg Research has said about Mullen. It doesn't mean that whatever they say is true, but whatever they say should be included in your decision-making process. So for the last trading day of 2022, Mullen has gone up to around 28 cents, up by 6% compared to the previous trading day. Overall, it hasn't changed the fact that the stock remains in a bearish tendency overall, mostly because the market still lacks the optimism in the company's long-term perspectives. The recent boost is likely caused by the arrival of iGo models in Europe, confirming a previous hype regarding new distribution contract. Whether this new project will be a success will largely influence what's going to happen afterwards, because if Mullen manages to register revenue, This could be a major catalyst for its shareholders and other market participants to keep buying its shares. In terms of long-term price action trends, despite the current momentums, if we can call them that, the company has been having a hard time. So over the past 5 years, they have mostly traded between $5 to $10, peaking around 15, before falling back to the penny stock level they are currently, stuck in, I think. What this tells us is that Mullen has been hard hit by the ongoing stock market downfall and that its own fundamental weaknesses don't help. This assessment has recently begun to change, but in my opinion, it hasn't reached a convincing turning point yet. And that to a certain point still explains why Mullen is a stock that I would recommend trading instead of investing. Regardless of the recent distribution contracts or the short squeeze, the interest around Mullen is the expectation to scalp a quick gain in a matter of weeks from the short squeeze, not really to have dividends from the car sales. With that being said, I also want to add that things can move very quickly in this field, so it's not because it's not worth investing now that it's never going to be worth investing in. So the online communities have been initially skeptical towards Mullen regarding its capacity to survive beyond the medium term if there is no more EV hype to fuel the stock price. The general mood has since then transformed into I would say like a high speaker of whatever the company announces, with sometimes pinches of optimism sprayed here and there. Because in part, we want to hope that there is going to be new demand for the stock in which they were holding the bag. Recently, some new announcements also gave investors hope that they're going to have some new projects in the future. But I would say that we really have to see, the execution being done at this point. I'm not sure that the announcements are always going to have this kind of effect. They sometimes do. They might get hyped, but this hype could last maybe less than 1 day. So in order for the whole thing to be more sustainable, I'm pretty sure that Mullen has to really show to the market that they mean business. They don't just mean PowerPoint presentations. They don't just mean hypes on subreddits or on YouTube comments. Like, this is the point in which we are now. On top of that, the macroeconomic trends within the sectors have been under serious pressure for several reasons, including the interest rates, the capital flight, the conflicts around the world, the supply chain issues, and also the expected recession. Another factor to look at is how the flagship company, Tesla, has been doing. So EV sector is a relatively new sector in which I think very often qualitative reasons outweigh quantitative reasons. In other words, if people have a good vibe about the company, they're going to invest. If they don't, they won't. So if Tesla is making new highs, people are going to think, oh, you know what? If Lucid is like a very small size Tesla, Lucid is also going to benefit from the same thing. This is what a lot of people will think, and sometimes it's a self-fulfilling prophecy. So, of course, Mullen doesn't always follow the same trends. So, we really have to wait and see how things are going to pan out. With that being said, let's also take a look at the company's books. The company's cash balance decreased somewhat, but for now, it is not a major issue that, the money has been decreasing. We know why it's been decreasing, because the company doesn't bring in any fresh money from its operations. With that being said, it's possible that within the next year, they're going to go through another few rounds of shareholder dilutions if they don't bring in new money from the operations. The liabilities. So they have recently publicized that they have reduced their liabilities by $13 million. This news wasn't received, wasn't received positively enough by the community. So what I mean by this is that I was expecting people to be very happy that Mullen has reduced its liabilities by 13 mil. This didn't happen because during the same period of time, the price went from 50 all the way back to like 30 cents or all the way back to 20 cents. So I would see this as a positive news, but most people don't. So the last element to look at would be the profitability of Mullen. This is one of the biggest weaknesses of the company and is, in my opinion, one of the main reasons why Mullen has remained a stock to be traded, not necessarily trusted with long-term capital, especially from institutional shareholders. The company hasn't generated revenue for more than a year, and despite its best efforts to control the general operation costs, the lack of operational revenue will eventually dig a hole in the finances, forcing Mullen to either take on more debt to further the dilution or to make additional effort to increase its revenue. I think that for options number 2 and 3, they are making efforts. I'm not sure about the real results though, at least not yet. So in my opinion, we should expect to see Mullen choosing the second option if possible, because it is the one with the least risk for the company. This may cause further tumbling down to the share price, and it certainly wouldn't help the company to keep its maintenance on NASDAQ. So overall, the financials show us that the company wants to do well, but is not. And what we need to see now is the company's capacity to increase its operational revenue, which hopefully we will see with the iGo distribution in Europe. Now, the clientele. Mullen's clienteles are mostly retails, of course, given that their core products are supposed to be driven by retail clients, and they might also have some commercial clients now they have distribution of iGos in Europe. By the way, just 2 words about iGos. It's a cheap EV car seemingly for goods transportation, so it's more like a business tool rather than a car. With that being said, I just want to put things into perspectives. In Europe, there seems to be many other kind of low-end vehicles, not EVs, but like low-end vehicles that are significantly cheaper and with more space. Okay, so I'm all willing to believe that if you're in small streets in Paris, yes, having this kind of cute cars like this is going to be fun, but is there going to be a lot of demand for those small cubes moving around, right? And it's not like we don't have, is it Golf Mini? Like the kinds of Golf Mini or tiny little cars like this that can do the same job. They're just not EVs, right? So how much are they going to cost? Probably more than 11,000. But I remember that for the same amount of money, a few years ago, you can get like an SUV from a brand called, I think, Dacia. So Dacia originally, I believe, is a Romanian car manufacturer, and then they were bought by Renault. And then ever since then, they've been chucking out like SUVs that are super cheap, but apparently don't have the AC put in. So anyway, it's a whole other story. Very interesting, but we don't have time for that. So at the same time, Mullen doesn't have that many institutional partners. Yes, they have like BlackRock, who recently increased their holdings. But other than that, I don't think that they have enough institutionals to change my mind on the fact that Mullen is better for trading at the current time. So the major catalyst or potential catalyst for Mullen is the short squeeze potential. Basically, there are tens of millions of shares been shorted against Mullen, most of them trading outside of public exchanges. So like the whole thing is probably from institutionals. The expectation is that eventually those shares have to be redeemed. And right now, with the price as low as they are, with the fact that they've been holding the 20 cents level, is now a good time to enter. So that's the whole question. And this is why people are interested in Mullen to begin with. We all know that fundamentally speaking, the company isn't doing very well, but that's also not the point. This seems to be the point. The share, like the short selling, seems to be the point. So with that being said, it's really important to control the exposure to a stock regardless of how interesting the price action seems to be. And at the end of the day, opportunities will always be there, but the capital may no longer be there, right? Your money might be gone. Does it mean that a short squeeze will certainly succeed? Nothing is for certain, regardless of how many stars are being aligned. So this is why my overall recommendation for Mullen is that we definitely should consider to buy in if we think that the short squeeze is going to happen. And also, if you think that the future is going to, like tomorrow is going to be better than today, right? Even though today might be worse than yesterday. Anyway. So given that the current price is not necessarily stellar, nor is its long-term future, the purchase approach should be a gradual entry over several weeks, with at least half of this allocated amount bought now. Because I think that it's low enough that, going below 20 cents takes quite a bit of effort on the shorting side to achieve this. So I would recommend a maximum exposure of 1% of your portfolio.